Morning, everyone. Welcome to this morning's edition of the MPC Markets Morning Call. It's the 29th of June, Monday, Friday, and over the weekend we had chips fall Friday night. There was some Fed hawkishness, and then a little bit of tension kicked off in the Middle East. We had Iran hit a Singapore flag cargo ship, and then also have try to strike another one with 2 million barrels of oil on it as well. The US then retaliated by striking the Iran missile drone storage sites and the coastal radar, and so not very good. And then Israel's destroyed some form of Hezbollah tunnel as well. So I mean, they've all now agreed to go back to the ceasefire. However, it's obviously not going particularly well. So, that geopolitical tension really at the forefront. Oil didn't rally that much, I've got to say. We're still around about the $70 mark in crude, which is kind of towards the lows. And, I think there's a lot of people calling a glut now, which I think is just absolutely ridiculous, because you've got energy reserves in most countries at their lowest, so there's going to be an underlying bid for quite some time in that oil market. We saw a few of the beaten down names, the likes of the software stocks, etc., catch a little bit of a bid. Same with the the medical and healthcare sort of stocks as well. And that's sort of, I guess that's fair enough. I mean, the chip stocks have had an incredible run. There's just a little bit of heat coming out of them at the moment. Another hawkish, like I said, another hawkish Fed. You're sort of shifting your money into places that have either already been beaten down and there's a lot of negative news priced in, or defensive names. So really starting to get quite keen on that healthcare sector overall. And look, who knows what happens with these chip stocks, but very volatile at the top of the range. Applied Materials and Lam Research, which you can see right in the middle there, next to Tesla, they were, there was no news in either of those. CAT, which has got a lot of exposure to the diesel generators in the data centers and things like that, so it's kind of a little bit tied to that trade, but probably more so the cyclical trade. And then obviously in the bottom left corner here, you've just got all of these guys, because it's just everyone's starting to realize that while these guys are making these enormous profits and enormous amounts of money, someone's got to pay for it, and it's the hyperscalers on the other side that are paying for it. So their margins are going to get hit overall. And and we did discuss this on Friday, but there was a lot of articles on the weekend around this, and a lot of charts and things. It makes a lot of sense essentially that. If Apple and Microsoft are busting all of their prices up by plenty across the board, then it's what's good for Micron, not good for the other hyperscalers as well. And they're in the midst of an enormous AI build out. They're issuing enormous amounts of debt. It's all starting to seem, a little bit. Just at risk, essentially. They were coming from a massive position of strength previously, and all of these hyperscalers, and they've still got a position of strength. Don't get me wrong, but let's face it. Now that they're piling on loads of debt, I mean, the monetization's got to come, right? And if it doesn't come from, we're gonna see some significant scale backs in capex, and then this whole thing kind of falls over a little bit. There are some bargains out there, I would say, like Microsoft, etc., that are that have been really hammered at 52-week lows on the back of pretty much nothing. It's the way the market moves these days until you get a catalyst to turn yourself around. Whereas on the flip side, the cybersecurity stocks got that catalyst 2 months ago, and they've rocketed back to all-time highs. So yeah, we'll just sort of see what happens. But I think I think it's a generational buy in some of these really good software stocks. Some of them will fall off the face of the earth, and we'll forget and joke about them in the future. But there's a lot of them out there that it's just not going to happen, I've got to say. It's a shortened week this week overall. I mean, we had the first sort of large negative week, I guess, for the Nasdaq and for tech stocks really, and we had 3.5 billion shift out of tech stocks in the funds, apparently across the ETFs. And look, there's been a few little reports out over the course of the weekend as well with, basically BIS has done an annual report. They're saying public debt's creating some sovereign financial stability issues and overinvestment and leverage hedge fund risk in sovereign bonds. Policymakers must act now. And then there's been a lot of talk around the the bond issuance, etc. from the from all of the hyperscalers, etc. So we got oil this morning up around about 1 and a bit percent. The SPI opened roughly unchanged. Gold, silver have dropped a little bit, and it looks to me like we're slightly higher in the Nasdaq supposedly. So which is a little bit weird for mine, given what sort of happened on the weekend. I mean, you can't rally on the back of there being new peace because they just fight each other and broke an existing ceasefire. I mean, this just buy on peace deal, but don't sell on missiles firing is actually getting stupid now in this market. So I think at some stage, risk will, the fundamentals and risk will come home to roost, but when that is, who knows? But these are the geopolitical flashpoints. So you've got, you've basically got this cargo ship getting struck by Iran, and then they've targeted US bases in Kuwait and Bahrain, and then Saudi Aramco helicopters crashed, 14 dead. And then you've also got Ukraine and Russia going on as well. They've set a massive refinery on fire. One of Russia's on fire as well. So, and then the US launched a second wave and they hit back. And I mean, look, I'm not saying they shouldn't hit back, but it's it's just like it just seems to be all very, very, very tenuous, and like they can't just keep like, I'm not firing missiles or drones and just going, I'm sorry, like that's not a ceasefire. So I would imagine that, with two ships struck over the course of the weekend, that, as a captain or an insurance company for any of those tankers, you're not feeling overly confident, I wouldn't have thought. So that's going to drop traffic. So we did have gold, silver, platinum, copper and things rally a little bit on Friday. We're still, look, I still don't really get this smashing in lithium and uranium and things. But I mean, there's a little bit of news around lithium in terms of, sodium batteries, etc. But, uranium and things, there's still been positive news there. And they still need power. And I really am a little bit baffled as to, where all this, rare earths and critical minerals thing, this thematic just disappeared and just got hammered. Trump's basically invested in these companies, and they have to get it done. So it's a little bit bewildering overall, but it just is what it is. Today we got some RBA minutes. We've got private sector credit here in Australia. Nike's got some earnings later on in the week, but it's 4th of July, so look. This week and probably next week are going to be relatively quiet. Expect some tax loss selling in the Aussie market, and I'm sure in those sort of smaller names, etc. But I don't really expect too much out of this week. So we'll just try and see what happens. And then there's like massive payrolls number, but it's on Thursday night, so. That'll be interesting to see. We may get a busy Friday. We don't normally get that. It's sort of good of them to move that forward. But overall, look, guys, we had a good discussion about the chips on Friday. All four of us here at MPC, and just going into quite a little bit of detail into those the hyperscalers and the memory chip thing. Kai did a little bit of explaining around what it all sort of actually means. If you want to catch that, just either scan the QR code or go to nbcmarkets.com.au/podcast. Have a great day, people, and we will speak again tomorrow, Tuesday.